All right, now let's go to our first caller, and it is Dr. Wade Locke joining us on line one. I really appreciate your time tonight, Dr. Locke.
Thank you, Pete.
So did you expect your comments the other night to start all this up again?
No.
No?
It was just I was giving a talk at a housing conference, housing seminar for the home builders. Mm-hmm. So, yeah, I was surprised.
But I guess it goes to show that people are listening to what you have to say. They're really, they take a lot of stock in what you say whenever you, talk on any topic.
Well, I thank you for that, and hopefully that is to some degree true, and hopefully it's helpful.
All right, now listen, let's talk first about the deficit, which is projected now because of the lower price of oil, much lower than the provincial government projected in their budget. It is expected to be somewhere in the vicinity of double what they projected, and that would make it up around between $500 and $600 million. Is that right?
That would be my estimate based upon the current prices that prevail right now. I mean, obviously they can go up, but your prices stay around where they're at now. You're going to be looking at a deficit that's basically double what was thought about in the budget. And
that pretty much has been alluded to, I think, by government as well. At a certain point, they discussed the fact that the level or the price wasn't what they expected, and therefore we should be prepared for a much higher deficit.
I think that's a reasonable expectation, yes.
Yeah. Now, here's two things. First of all, people were surprised that they projected such a high price for oil, and nobody else seems to have in the country, as far as I'm aware. People say that's uncharacteristic. In the past, they had, expected it to be lower than it turned out to be, and therefore we're happy with a surplus at the end of things. That's one thing. But also, I mean, this is a very interesting time. We've got an awful lot of contracts, being renegotiated. What does this mean for these, public servants that are now looking for a new 2, 3, 4 year contract?
Including university professors as well.
Including you, yes.
Let me go with your first point. One needs to be a little bit careful about comparing the price that we assumed to the price, say, that Alberta would have assumed for the price of oil. Alberta sells their oil into Cushing, and West Texas Intermediate would be the reference price.
Right.
And we sell our oil on the coast, and the reference price will be Brent. Mm-hmm. There's about a $20 spread between those two prices currently. Mm-hmm. So even if, for example, suppose we had predicted $120 and somebody says, well, Alberta's only predicting $100.
No, I know that there's a difference between those two. But does that cover all of the discrepancy?
No, it does not. No.
Okay.
I'm just trying to give a sense of why there would be some difference. It's because where we sell it to is different. But no, I found the price to be high. But I mean, there are experts in the world that are retained by the provincial government for making suggestions about what the price of oil might be. There are people who try to do this stuff for a living, and not me, by the way, but I was surprised by it when it came out. I mean, I would have thought $10 lower would have been a more reasonable number. And
I mean, the tendency seems to be, and the prudent thing seems to be, to err on the side of caution and bring it down a little bit to keep everybody's expectations more reasonable. Isn't that the way it goes?
If I were making a decision, I would have been more prudent, and I would have decided to, it's always easier to decide how to deal with, give people more money than we're expecting than taking things away from them.
Absolutely. I mean, really what this suggests to me is that they thought it was perhaps going to be even higher, like $1.35 or something.
I assume, I understand that they had good expertise telling them that the price was going to be in the range of $124 per barrel. Mm-hmm. That didn't turn out to be correct, and it won't rise enough between now and then, unlikely. I mean, it can, obviously, but unlikely to rise enough between now and the end of the fiscal year to make up that difference. So I think we're pretty safe in assuming that there will be a bigger deficit than we thought. Okay.
And obviously this spells pain for the people who are saying we are a have province now. We should be able to talk a reasonable increase in wages and whatnot. That kind of news certainly has to put a damper on those expectations.
Well, a deficit this year and a deficit next year wouldn't be a huge problem for providing funds for the public sector if that were the issue, okay? If all we're expecting is that we're going to have a deficit for 1 or 2 years in the order of $500 million, that would be unfortunate and something we'd want to deal with in terms of trying to economize our expenditures. But that wouldn't require the kinds of changes that I've been talking about recently in terms of getting our expenditure in order. What's happened, Mr. Soucy, is that over time, revenues have gone up to the government, and our expenditures have grown in line with those expenditures.
Mm-hmm.
Our expenditures have grown in line with those revenues.
Mm-hmm.
And unfortunately, with the maturing of the oil and gas fields for Newfoundland, we're going to start seeing a decline in the huge amounts of revenues we got from the oil and gas sector. And unless we get our expenditures in order, we'll go into a systematic deficit whereby we'll always have expenditures higher than revenues.
Mm-hmm.
And that will add to debt and debt servicing and all those kinds of problems that we're not going to like. So my advice to the Minister of Finance and to this government is to think about, in a longer-term perspective, how to control and moderate your expenditures. And yeah, that's not good news for people at the university or for public service in general, because the biggest means people or remuneration.
Dr. Locke, I've got to go to my break. Can you just hold on for a couple of minutes and finish up with us after the break? Okay, I'm going to put you on hold. We'll be back to you in just a couple of minutes. We will take our break and return as quickly as we can. We're still with Dr. Wade Locke, who's joined us off the top of the program. Mr. Locke, now this comment about the mining in Labrador and that it would cease if Muskrat Falls didn't proceed, that's really not the case, is it?
Can I, I'll answer that question, but can I just finish up my thought on the deficit stuff? Mm-hmm. This doesn't call for a slash and burn, right? I mean, I want people to understand that this doesn't call for dramatic and drastic action now. It does call for a plan whereby we're going to bring our expenditures back in line with our revenues in the medium term, right?
Yeah, here's just, I know this is going to turn into another question here now, but say it's $500 million this year, the deficit. I know our debt is much lower than it was some years ago, but how much can our debt go up by before we start seeing a change in the lending rates, from where we borrow money? Is that going to be a factor too if we allow our deficits to continue year after year for very long?
If it goes on for several years, then yeah, that will be an issue. And more than that, the servicing of the debt in terms of the amount of revenue in the budget to go to covering the debt will start to go up. We're down pretty low now. We used to be up around 22% at one point. We're down around 10, 11% now, right? And
does the timeline for when the revenue from oil starts to shrink? I mean, we are hearing about new discoveries, new developments, that there's probably a lot more out there than we thought. I mean...
Well, if there are new discoveries other than Misson and Ballycotters, then that will help. And, of course, gas can be developed, and that will help. There are a lot of things that can help. But based on what we know about now, we better start thinking about how we might be able to deal with stuff if these things don't come to fruition. Okay. That's what I'm suggesting to people.
All right, we better move to the mining thing,
I'm just a wordy kind of guy, so you need to focus me. No, I mean, what I was saying to your reporter when she asked the question was that there are two things that are going to be needed for the mining development to go forward in Labrador. One is people. We need skilled workers, and that's a constraint for us. And the other is power. If we don't have power, then the projects that are expected to go forward, and there's more projects than just Alderon, just so we understand that. If we're only talking about Alderon, then maybe the 100 megawatts of recall power can do it.
So far, Alderon's the only one looking for Muskrat Falls power.
But Alderon is not the only project we're expecting to occur in Labrador.
No.
We're expecting production in Labrador to go from 20 million, 25 million metric tons up to as possible to 80 to 85 million metric tons.
So regardless of how much there is and how many companies and how much activity, there is power available.
Sure there is. And but there won't be power available domestically if this project doesn't go forward. This seems to be the most reasonable thing that can satisfy both domestic demand and the mining and industrial demands.
Domestic demand is not really the primary concern here, because the amount of domestic demand, and that's if you take Holyrood out of it, is relatively small compared to what we're talking about, even coming from Muskrat Falls, let alone Gull Island, right?
Well, my understanding is that when this project was first put forward, the rationalization was to meet the power needs on the island, and any surplus would have been exported.
And then that changed.
Well, I mean, people are now starting to realize that we can use the excess power in Labrador to develop the mining activity in Labrador, and that can have potentially big impacts. Now, with respect to the possibility of buying from Quebec, I mean, I don't know how long it would take to negotiate a contract in that particular way or what it would cost. I mean, those are things that we should think about.
Well, they just did a 25-year deal with Vermont for 5.2 cents.
Well, okay. I mean, let's just deal with the numbers that we know about right now. So if you can get a number for 5 or 6 cents, it's not very far different from what it costs you to produce power in Labrador. Half the cost that we'll talk about is the transmission cost to the island, right?
Yeah, but we'd be spending $3 billion as opposed to whatever turns out to be.
I don't know what those numbers are. I mean, that may be so, but I mean, these kind of questions you need to address to NALCO or to the provincial government. I mean, I'm just looking at the information that's available publicly now. One thing that we do know about is that there is a tremendous potential for economic development in part through the mines in Labrador, which we want to be careful that we don't lose that possibility.
But they're not going anywhere. What they want is in Labrador. They're not going to pack up shop and go somewhere else when what they want to mine is in Labrador.
That's true. The resources won't go anywhere, but it's like coal in Cape Breton, right? I mean, there's lots of coal in Cape Breton, but it's not really mined anymore because the technology has changed. So the issue you need to think about is as capacity grows in the world, you may miss out the boat on that as well.
But as we have already established, there's power available through Hydro-Quebec. Anyway, listen, we're going to move on. I appreciate your time. Thanks very much, and I certainly look forward to speaking to you again, and perhaps we can discuss having you in as you have done before. But I think it's a great thing from time to time to give people access to somebody with your expertise.
Thank you very much.
Okay, good night.
Bye.